Between rapidly changing tariffs and a shaky tech sector, the stock market has been unsettled and fears of a recession are growing.
So Nick Foulks from Great Waters Financial is here to walk us through this. He has the latest on the markets and some tips for approaching a volatile investing period. Good to see you.
Great to be here.
Let's just start with why the stock market is so volatile right now.
Well, the stock market reacts a lot to the news. And if you haven't noticed, there's kind of been a lot of news out there right now. There's concern around things like tariffs, right? We're concerned about interest rates. We're concerned about inflation. We're concerned that the AI sector isn't performing the way that we thought it would. And so as those concerns grow, as that conversation grows, people get more and more nervous about it. And people are the ones who are investing in the market.
Without maybe getting ourselves too emotional about what we're seeing, what should we pay attention to when it comes to the stock market in the next few months?
The big factors, right? So if you think about it this way, the Federal Reserve, they're making decisions on interest rates, which is all in relationship to inflation. They're trying to help control some of those inflationary factors. They've paused in lowering the rates right now, so pay attention to that. Are the rates going lower? Are they going back up? And so corresponding with that is the inflation rate. Consumer price index has come in just a little bit lower than the year-over-year rates. So are we seeing greater inflation rates? That all directs what's going to happen with some of the big changes inside of the stock market.
Interesting. What can investors do to manage their risk when it is volatile like we're seeing right now?
The first thing is you just honestly have to stick to your plan. You don't want to start changing. It's really easy when you get emotional, when you get fearful, when you get a little bit concerned, to try to change the plan to, I want to go to cash. But you have to think long term. It's about the time in the market, not trying to time the market. So that's a big one for people to be thinking about. Another one is you have to diversify. You'll hear people say, well, the markets are going crazy. Well, which markets are you talking about? Because if we're talking about the Dow Jones, now we're talking about 30 stocks. If we're talking about the S&P 500, now we're talking about major US companies. But what about what's going on in the global economy, where they're actually up 8-10% right now in comparison to the US market? So you want to diversify. You also want to keep investing. If you're still pouring into your 401k, don't stop just because you're nervous. Buy in, dollar cost average into the market. And then the last thing is get some professional opinions. Work with a pro. So for us at Great Waters Financial, we've served thousands of people, helping them get a plan in place so that they're confident with what's going on.
And how can you build a plan so that maybe you can better weather these storms or not be as concerned about it?
So there's two different types of plans. Some people are trying to build an investment plan, and other people are trying to build a financial plan. So the investment plan is really just about the returns you're trying to obtain based on the portfolio. If you want to weather the storms, especially if you're in or you're nearing retirement, the thing to be thinking about is building a plan that accounts for the income you're going to need. Because the concern is when you sell, when you have to sell those assets to produce income. So for example, at our firm, we create a 5-year distribution plan. That way you know where your income is going to come from lower volatility positions. So you don't have to think so irrationally when markets start changing, because you know it doesn't hit right home right away on your income streams.
Yeah. We have a little more time. What is like one mistake to avoid right now for people?
Yeah, one mistake to avoid is to allow your emotions to dictate your choices. Our emotions, those can change, they can ebb and flow. Think about how the market looked last week, think about how it looks this week, right? It can swing, it can change on you. So will your emotions as time goes on.
So don't like panic, look at your 401k
don't look at
like
Jeff. Just glanced at it. Didn't look great for a couple weeks there, but you're right. A new week is upon us, and things are starting to look better.
Yeah.
All right. Nick, thank you so much. We appreciate it.